Okay, everybody, here we go. It's me, Gregory Mannarino. Post market wrap up on this. Oh my goodness, I'm all frazzled here. Monday, August 7th, 2023. I kind of wasn't ready just yet. Trying to get my act together here. Um, you know, I don't even know where to start this. How about just let's touch on the market real quick because I have a lot of stuff to talk to you and with you about. So we had a market today that firmly believes, at least gauging from today's rally, we had a gain in the Dow, a gain in the S&P 500, a gain in the Nasdaq, which was negative earlier, but some miracle happened and it got all propped up here. So the market seems to believe after last week's sell-off that the Fed is going to do more. The 10-year yield, I mean, we're talking incrementally higher, dollar relatively flat, MMRI sitting at about 259. I was reading the comments from earlier. Most of you believe we're going to see the MMRI drop probably below 250. The market seems to agree with you that the Fed is going to do more. Friday was a clear sign. The market telling the Fed do something, and I think we're there. And again, look, the Fed does buy the market. They buy large cap stocks. They prop up the market that way. And again, we're going to see where this goes. So on the back of, again, a gain for the major indices, I mean, the relative strength of the dollar, honestly, almost flat. Same thing with the 10-year yield. Same thing with the MMRI. You got cryptocurrencies in aggregate flat to slightly lower. Gold slightly lower. Silver, unfortunately, taking the biggest hit here, falling like 2.2%, 2.21%, something along those lines. Okay, lovely and fantastic. Crude oil also falling under some pressure, whatever there as well. We know where this is all going longer term. Now, there's all this talk about BRICS nations, BRIC nations, BRIC nations, BRIC nations. I'm going to ask you to do a little bit of homework here, okay? Most people, it seems, are looking for a saving grace here with regard to the BRICS nations. It ain't coming, at least no time soon. Just for your own enjoyment, look this up. The exposure to U.S. dollars by BRICS nations. How much U.S. debt are they holding? And it might kind of give you a little bit of a wake-up call here. I'm not saying that things aren't going to change here, but this is not the end-all, be-all that people are expecting. Moreover, I think it's going to lead to conflict, armed hot wars, and loss of human life, unfortunately, probably on a grand scale. So, where should I start? Like I said, how about this? Let's talk about, this is what Morgan Stanley had to say about the stock market today. And this is a quote: "Stocks would be much lower if it were not for excessive," and that's their word, "government spending." Of course, I mean, this plays right into this GDP number that we got. It's fake, even with all the rigging and fakery and buying. We're not even keeping up with their own numbers with regard to the rate of inflation. So I think that's really what we should be focusing on. I mean, it's amazing to me how they spin all this. Oh, look at this number. It's fantastic. It's 2.4%. Again, look, global GDP. In fact, they want you to focus on these little incremental things, but you look at their numbers, you get a 2.4 print on GDP, US GDP, and they're telling us inflation is rising at 3%. So how is that a good thing? I don't think it is. Global GDP out of control, surging. Cratering as a percentage of GDP. The global economy is in free fall. It's in absolute free fall. And we know for a fact that global spending is going to balloon. Government spending is going to balloon, obviously, as well here. But as a percentage of the GDP, we're going to be getting into a lot more trouble moving forward. Now, speaking of trouble, let you and me sit back for a moment. a year ago. It's a year ago now. You and I, right here on this blog, spoke about how the banks were in trouble. The financial system is in trouble. The banks, more specifically, because of what? You remember what I told you? What we spoke about? No deposits, no loans, no deals. So this is what we found out today, and this is kind of incredible. First of all, there's what they're hiding from the public is the regional banks. None of this was really fixed. Again, we're getting these mergers and stuff like that. But another bank has failed. Heartland Tri-State Bank has failed. Okay. Imagine my shock. Imagine your shock. But this is where it really gets interesting. Going back to deposits, people don't like to, and why should they want to keep their cash in these institutions? I've been telling people for the longest time, you want to win, you want to take down the financial system, get your cash out of these institutions. Why do you have it in there anyway? It doesn't make any sense to me. I mean, you need some because you got to pay your bills, and unfortunately, we're all kind of screwed playing the game, their system, and unfortunately, that's the way it is. But getting your cash out of these institutions is what people are doing here. So just check this out. This is amazing. Between JP Morgan, Wells Fargo, Bank of America, and Citigroup, in 1 year so far, they have seen $262 billion in outflows. People closing their accounts, pulling their cash out of these institutions. Now, this is a problem. Okay, this goes back to what you and I have spoken about. Not only are there no deposits, people are pulling their cash, hundreds of billions, 262 billion in just the last year. You think this is going to turn around? I'll tell you what makes it even worse. Again, the savings rate in the negative. People can't save. Not only can't people save, but they continue to bury themselves in more debt. And as you and I have discussed a billion times as of late, we're seeing loan defaults skyrocket at their fastest pace ever, more so than the Great Recession. But it's all good, and we're doing fantastic. You know that you know we are, because it's saying Biden's not telling you that, and you probably could turn on the propaganda ministry. They're going to tell you the same thing. So I want to hear from you. What do you think about this nearly $300 billion in withdrawals being pulled from four major institutions here? 262 billion. We're going to be at 300 billion too. So do you think this sounds great? Do you believe that this plays into a very strong financial system? I don't think so. Period. And going back to what I see some of you are writing here, yeah, food inflation, energy, all the stuff that you and I spoke about before any of it. Okay. And I'm proud to say, with regard to this whole banking system, while everyone else was saying how strong it was, I'm not talking about YouTubers, okay? Because a lot of guys and girls who are out here putting out this information, they get it. But the propaganda ministry telling you how great everything was. Meanwhile, you and I knew no deposits, no loans, no deals. And unfortunately, it's going to rear its ugly head. Not only that, I mean, we haven't even, just wait for the commercial real estate nightmare to start unfolding. It's going to be pretty freaking epic. Absolutely epic. Now, here's another piece of information talking about the banks. Okay, banks are relying. You're not supposed to know this stuff. And I want you to. Ooh, I'm getting an interesting phone call here. I wonder who this is. Ooh, maybe I'm getting in trouble. Banks, the government, our so-called government, is supplying a lifeline to these zombie banks. How does that work? I mean, aren't we supposed to have a free market and a free market economy? Well, how can we have that if we have our so-called government, and this is supposed to be a government of the people, by the people, for the people? So you are supporting zombie banks. Shouldn't they be allowed to fail? I think they should, but that's just me. Thank you, Ralph. And there's going to be more. I did a video a couple of months back, maybe a couple of them, where I said we're going to see more trouble with large banks. We're going to see one, maybe two large banks fail, probably get absorbed, kind of like how Bear Stearns got absorbed by JP Morgan. You know how that worked, right? Oh, that was beautiful. JP Morgan got to buy all of the good assets on Bear's books. Meanwhile, you and we got forced to buy all the dog poop. Okay, I was going to say SHIT. We got forced to buy all that. How does that work too? Does someone here want to explain that to me? Because I just don't get it. So that's really the story here, people, what's going on. So again, let's just back up. Rally here in the market because the market clearly believes the Fed's going to do more, and the Fed probably is doing more. The Fed's probably buying the market, buying stocks. It's interesting here. NASDAQ was lower while you had the Dow and the S&P higher. Then all of a sudden, miracle. This is, again, it's the Fed trading desk at the New York Fed buying large cap stocks, buying large cap tech. That's what they're doing here, and they're going to buy more of the market. But I do believe sincerely still that it's more than likely that we are going to see a drop here in the 10-year yield, and the market's probably going to go full on orgasmic over it. That's just my view here. And again, this is an interesting thing. I mean, how many of you were surprised? And again, please answer these questions. How many of you were surprised to hear a major bank, Morgan Stanley, say that the stock market would be much lower if it were not for excessive government spending? And again, I want to hear from you on this $262 billion of cash getting pulled out of. Okay, let's go over JP Morgan, Wells Fargo, Bank of America, and Citi. One of your banks. You know what I'm going to tell you, people? What's Greg Mannarino going to say? Get your cash out of these institutions. Only keep what you need in there. Nothing more. Nothing more. With that said, let me see. Did I write anything else down? No. That's the chart I made of the Fed's balance sheet. Oh, there's more calls for the Fed's balance sheet to balloon even higher, which it will. Again, you see this little blue arrow? This was where I was speculating it would go. And you see, I think we're going to be up here. I mean, we're going to go straight on freaking, parabolic here. I don't think that many of you would say that I'm going to be wrong on that, because we understand, again, what's the goal? To be the lender and buyer of last resort. Every central bank, that's what they want to do. Do you believe that they're not going to achieve that goal in collusion with our so-called loving, caring representatives? I don't care who sits behind the Resolute desk. It's going to go up and up and up and up. Anyway, Amanda, let me answer your question here. Why is Greg expecting the 10-year yield to dump? Because I'm expecting the Fed to buy more. When they buy more debt, the yield comes down. It's clear. It should be very simple to understand that. Let me see here. Thank you, Red Pill Diaries. I appreciate that. Energy, absolutely. Commodities, absolutely. That's where you got to go. Bitcoin to zero. Let me know when that happens, okay? Because it ain't, and I'll bet you a Bitcoin that it won't happen. It's not going to zero. Sorry, I've been hearing this freaking nonsense for so long. It makes me laugh. But that's okay. Whatever. Yeah, exactly. Anyway. What else, people? What else you want me to do before I get going here? Maybe it goes negative like oil. What goes negative like oil? Don't know. It's very possible. Yes, it is very possible that we could see some moves with Bitcoin. It's a very volatile asset. There's no doubt about it. Why is that? Because it's a relatively new space. I know it's, if you look at the cryptocurrency space as a whole, well, first of all, this whole cryptocurrency space, excuse me, nose itchy, has taken quite a walloping lately. The market cap has got cut in half. Thank you, Red Pill Diaries. And we'll see where this is going to go here, because again, you got to look at where cash is likely to go in a full-on meltdown. And that's really what I'm looking at. With regard to gold and silver, they're probably gold, silver, and even commodities in aggregate and Bitcoin and cryptos, they're going to remain relatively in a range for a while, I think, until we get that meltdown in the debt market. It's going to happen. I mean, all the Fed's going to do is make these distortions even worse. Meltdown in the debt market crushes global stock markets. Cash moves. It just doesn't grow money wings. You know that, and fly away to money heaven. It moves. It's going to find other places to go. And in Greg Mannarino's view, and you're entitled to your own opinion as well, of course, you're going to see it moving to commodities, especially ones that have been massively suppressed. I'm referring to gold, silver, and I also believe it's going to make its way into cryptocurrencies as well. Well, blah, 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 blah. Scott, we'll have to see. Like I said, nothing would surprise me. You're talking about a competing currency tied to gold. Again, they would have to revalue it. I mean, there's a lot more to this than meets the eye. It's just like, okay, guess what, everyone? We're going to now back our currency, and more than likely, it's going to be a fractional. It's not going to be if in fact we get any kind of a gold-backed, BRICS-based, whatever currency, it's going to be a fractional reserve. It's not going to be one-to-one, because again, they would have to revalue gold to beyond anyone's wildest imaginations, and I don't think that's going to happen. I mean, the revaluation of gold, I think, is likely one way or the other. I mean, we're eventually going to see. Again, look, my perspective is pretty straightforward on this, and most of you know how I believe it's going to work. I believe we're going to eventually see, first of all, stock market. Let's just look at the Dow Jones Industrial Average. It's beyond la la land. It's way beyond, way beyond. It's going to come down. At the moment, we have an implosion here in the debt market. Where's the bottom? You tell me where the bottom is. What we do know is the Fed jumped in at Dow 6,000 to start buying. That was QE1. So we don't know where the bottom is. If we just assume the bottom is 6,000, okay, I think we're going to get a 1-to-1. A 1-to-1 with gold is very possible. So that would be gold 6,000. And then a 10 or a 15-to-1 with ratio with regard to silver. These things are definitely within the realm of possibility. Again, in a full-on meltdown. But again, the stock market doesn't make any sense. And even according to Morgan Stanley, the stock market would be much lower if it were not for excessive government spending. Everything would be, and inflation too. But again, you're not supposed to know that. All this excessive government spending, and we haven't seen anything yet. And I'm talking about around the world. This isn't just a phenomenon here in the United States. All of this is destroying the purchasing power of the currency. You can't just create this stuff out of nothing and expect there to not be a side effect of it. You know what I'm saying? I mean, this is what are central banks doing? What have we talked about for 10 years? They're in a race to the bottom. Every single one of them is destroying their currency on purpose. Thank you. Where's the Dow top? Dude, there's no way to pinpoint that. I'm not in the business of pointing out tops and bottoms. I think it's a losing game. Lava Girl will tell you that. So will Systems Reality Team and all my other lovely friends that are here with me all the time. Where's Lord Humongous? The top is wherever it's going to be. Okay. The valuations in this market, none of it makes sense anymore. Technical factors don't make sense anymore. Fundamental factors don't make sense anymore. Nothing makes sense anymore. When you have this kind of a situation here where central banks are still pumping, they're still keeping rates suppressed. When central banks do this, thank you, Dell, it just opens up a doorway for cash to make its way into risk assets. And it just creates more and more distortions, not just in equity markets, but across the spectrum of asset classes. You all know that nothing is real here. I don't know for how many years I've tried to explain when you have this kind of a situation. This has been going on since the last meltdown, where central banks are keeping rates artificially suppressed. Nothing has a real price discovery mechanism. When you have, generally, look, when in the market, there's generally a buyer and a seller, whatever it might be, asset XYZ, whatever it might be, a stock, an exchange-traded fund, a currency, whatever, a commodity, there's a buyer and a seller. But when you have a situation like this, there's a third party, and that is central banks who are propping up the system. They're buying all the debt. So there becomes this separate entity over here that is involved in every single transaction. It's no longer a buyer and seller. It's the buyer and seller and central banks who have, again, created this kind of environment. It's out of control. It's so far out of control, but you all know that. Exactly. It's a freaking clown world. And again, it's just so crazy. Axiom's here today. Artmaster, Wendy, where have you been? My God, how are you? Anyway, coup de drag videos. I tried to post one from the last time I was at the track. It wouldn't work. I will get one out. I'm going Thursday. I'm taking the coup de back out on Thursday. We're going to run this darn thing, and we'll see what we can do. And I'll see if I can get a video. I will at least, I promise, get some more pictures for you. All right, people, that's kind of where we're at. All right. Anything else you guys want to cover real quick before we call this here? We are. David, maybe not. Maybe we're not, whatever you wrote here. F you, maybe we're not. We know what's going on. We know what we have to do. Collectively, I think for the most part, people are done. And but at least we get it. My CUDA is in 1968. This is Madison 32 asking what year it is. Lava news, exactly. It's opportunity, and it is exciting too. Most people are just zombies. They walk through space and time. They don't know what's going on. They don't know why they're doing what they're doing. They just know they get up every morning to go work for the privilege to borrow cash from the Federal Reserve, because the dollars that they work for are not theirs. They're owned by the issuing central bank, plus interest that they create out of thin air. They're owed back to the central bank. You know how crazy this is. It's bizarre. All right, people, look, that's it. I don't know what else to say. We covered a lot. This is a long video, and you know what happens. People complain. They complain. Greg, your video's too long. Love you a lot. Thank you. We got 1,600 people here. We got 570 thumbs up. I appreciate that. Those really do help the video get out there. And please comment on the stuff we talked about, that we covered here. I will read the comments. I promise. Okay, we will get together again tomorrow morning for the pre-market report. It's going to be just as beautiful. You just restored a 442. What year, Aaron? I love them all. Honestly, yeah, hell of a car. Mass layoffs. They've been happening, tens of thousands. And, but we're doing great. We're adding jobs. We are, because they're telling you. The mainstream propaganda, they're telling you that we're adding jobs, so we must be. What do we know? You know what I mean? All right, people, I'm out of here. I'll see you in the morning.